Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Best Moments episode of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hello, everyone, and welcome to the newest episode of Futures Radio Show, where we will highlight our favorite moments of the show over the past month. But before we get started, I want to thank all of our sponsors: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. So without further ado, let's dial into those top moments of the show this month. We talked a lot today about your process, your approach, your execution. And a lot of it is very simple, and I love that. What is it that separates you from other traders using these tools? What is it that gives you your edge in trading?
I think it's looking at all these tools and using them in the right context. So being aware of multiple pieces of information, right? Not just looking at one tool, not just giving weight to the profile and not looking at anything else. It's really looking at the markets holistically and being aware of the positioning of market participants, or at least what I think the positioning of market participants is. Also looking at the charts through that lens of market participants, understanding when one side might be caught on the wrong side, which can usually result in some bigger movement. But it really comes down to understanding market context and not looking at things mechanically, but more holistically and contextually.
Last question before we get into rapid fire. I can't really go a show these days without talking about a trader working on their mental and physical health. Are you doing anything away from the screens to help you with your trading performance when you're at your screens?
I think working out is definitely a huge help. So I try to work out at least 3 days a week. And aside from that, I have a 15-month-old at home. And I think just spending more time with him is actually really helpful, even for my trading. It actually just helps me become a better trader and be better in all areas of life. But most of my time is spent with the baby and outside of trading. I think being physically active is really important. I live in Southern California, so we have pretty nice weather throughout the year. So taking a walk is really helpful. Kind of helps put a lot of ideas together. So yeah, that's definitely very helpful in trading.
Larry, you're 77 years old and in great shape. We talked about how you've been trading for 57 years. What have you been doing over the years away from the screens to keep yourself in good physical and mental shape?
Well, I think I've tried every health program that's come along. I've been vegetarian. I've been, you name it, I tried it when I lived in California. I went through every head trip there was, from Hess to Eureka to Scientology to Nepenthes to you name it. And And I got a lot out of all of that, actually. Every single thing had one bit of information that was worthwhile. Um, um, so that was a mindset, I think. And my mother gave me a mindset to be positive. I think that's just incredibly helpful. Like, yeah, I'm going to be positive. I'm going to try to find out how I can't do something better. Health-wise, what I boil it down to for myself is there's 4 pillars. One is exercise. You got to keep moving. Satchel Paige said it best: keep moving, don't look back. So you got to stay flexible and keep moving. Clearly, what your parents told you about diet was right. You have to be choosy about what you eat. You have to deliberately make choices and say this is good and that's bad. And that's going to vary for everybody. Everybody's body is probably a little different. It didn't work for me to be a vegetarian. I was for 10 years or so, and then I started running marathons. That didn't work at all for me. So you have to figure out you and what you're doing. Sleep is huge, I think. And that's the 3rd pillar. And the 4th pillar is stress. You need stress in your life. Most people don't have any stress, and so they're bummed out. It's not fun. You got to have some stress. And you can take it from experience from me. You can have way too much stress in the market. You can relate with that, I'm certain, Anthony, as a trader. So you have to balance out that stress. And it's all, my dad was, I didn't go to college or anything, but what a smart guy. One day I was doing one of my stupid diets or something. He said, Larry, all things in moderation. I go, yeah, he's so right. He's so simplistic in that. So you need some stress, moderate. You need a really good diet. And then I've taken some supplements along the way. And I think that your lungs are probably the most important thing to keep going. Everyone I've seen who died on a respirator. They couldn't breathe. So lung function is huge, and I really work on lung function through exercise. I'm not going to smoke. I'm not going to vape. Nothing goes in my lungs except good air.
Hey everybody, I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 Index futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. One thing you said that stuck out to me about your strategy is that you look for non-random factors. Could you
Correct.
explain to us what a non-random factor would be?
Well, in the markets, movement is practically random. Information comes in, and the market moves in what our brains perceive as a pattern. When in fact, when you put it through the ringer and you try to find statistical relevance, there is none. It's practically completely random. There are, however, a couple of relationships when you start to put a couple of things together that end up being non-random to a certain degree. So it's kind of hard to explain. The randomness is tested. How we test that is we take all the information that we derive, the relationships that we test, and then we take those and we test them against random sets of data. So you could take 2012 and run your strategy throughout that year, and if that's the data you use to develop the strategy, you're going to come out with a profitable trading strategy because you developed it on that data, you ran it on that data, and you're going to come out with a nice profit factor. What we do is we take our relationships, our factor relationships, and test them in sample, out of sample, and with clean data sets. So what that means is that we will put together a clean data set that is made up of a small amount of data from the past 20 years, and then we mix it, over 10,000 times. We do Monte Carlo studies that takes data in and out of sample many, many times and runs the strategy practically as if it were new market information coming in. And so we try to do the best we can to have factors that are, like I said, non-random, non-curve fitted, developed over 80,000 iterations of market data across 28 markets, so that we can lessen any type of curve fitting or random factors that we have.
I want to talk about you executing if something you see that you're interested in and how you would go about that. So we talked about your 3 C's: constraints, cash markets, conditions.
Yep.
You spoke about how you like to focus on trading Feb versus March as a spread. Give us an example of something that may come up, something that you're looking for that would be a trigger point for you to trade that spread, and how you would go about trading it.
Great question, Anthony. Well, first of all, I like to build positions in the shoulder months, and October is certainly a shoulder month. And what I mean by that is like April and October are sort of the lowest demand months out of the year, and it tends to, market tends to drift off and be a little aimless. During that period, that's when I like to buy some of these spreads that I know react when, if some new information came into the market. So I think as of yesterday, or it was, it's 10, and then that spread was, down to 8, and I think it got a little below there. All the way down, I'll take in a little bit every day. I hope it continues to go lower. If this spread was at the high end of its range, I would be going the other way, right? But it's at the low end of its range. I recognize that it could, Feb could go under March, then I'll stop out, right? If it's to 0 and flat price and everything has turned bearish, I'll definitely stop out. But at 7 cents, 6 cents, 5 cents, those are positions I'm willing to layer into. That spread might not even move too much, even if we have the next leg down. And in that way, I feel comfortable about that versus trying to just outright go long or short at the moment. The minute we move into a bull price pattern, I'll look at outright length. The minute we move into a bear pattern beyond the lows that we're at right now, I would consider sort of executing or looking at puts for next summer. I like when the market doesn't have any fear in it at the moment, things tend to get overlooked and they're cheaper. They get forgotten about. Everybody likes to talk about March, April, blue way out. I think now it's 18 or 19 cents. I personally don't like that one because March always clears under April. But this is the time right now that if you are looking at seasonal charts and looking at, putting on some of these maybe option spreads or, calendar spreads, nobody's paying attention. So you can, get a position on. And that's really, it's hard when that, like I think when any market, right after oil, when the Saudi news came out, it was really hard to get anything on unless you were willing to start shorting, in the face of that. It was really hard to even execute long because the gap had already happened. And the same thing will be true in natural gas too, right? There will be something that will move us, and you just want to have some positions on prior to that, that could potentially be lucrative.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. I think a lot of people, when they think about consistency, they try to make money every single day. For me, I know in my career, I made money in moments. The trade you mentioned today, to me, I get it. I totally understand what you did. That trade may not come around again for who knows. You don't know, right? It could be tomorrow. It could be weeks.
Right.
You're one of the best traders I know. You're one of the most consistent traders I know. When you look at your career, because you've been doing this a long time, do you make money in moments, or are you someone who makes money on a regular basis?
That's a great question. And so I think the traders kind of fall into a couple of categories, and one is the grinder. And for me, that's never been what I am. I'm not a grinder. I'm not a scalper. So that means I'm not like looking for these like little 1-2 tick trades. I'm looking for moves. I'm looking for an actual move like that's many handles. And so, like you said, those don't come around every day, and there's not always a news event every day. So I would say the majority of my money is made on, like moments like that, where today I had this one trade and an idea presented itself and I acted on it and it worked out, and so 80%, 90% of my money is probably made, on 10% of the days in the year.
Yeah, it's the same with me. But how do you stay patient, right? That's always the question. I mean, we all want to come in and make money every day. I'm sure a lot of people out there are saying, well, how do I know when that day is going to come around? So what is it that you're doing to keep you patient, to waiting for those moments?
Well, a lot of it is experience, that and understanding that I can't do it every day. I've tried and tried and tried. Believe me, I have tried so hard to be like that trader that makes money every single day. And after a while, you just get to the point where this is not a profitable situation for me to be trading. I have to find some other thing to distract me or take me away from the screen or help me to prepare for some other event. Because if I try to trade, the market all the time, I am not profitable doing that, because that's not the kind of trader I am. That's not where my strengths lie. I'm not a purely technical trader, which I think if you are, maybe you can grind it out. I don't judge or have preconceived notions about what anybody else does. But for me, it took a long time of doing it and not doing it well, or doing a lot of stuff not well for a long time, to realize don't do that anymore. Don't stop touching the hot stove.
Yeah, exactly. Eliminating the things that don't work. Right? I mean,
Exactly.
It seems so simple, but I look back at my career and it's the same thing for me. It's just every day, you want to have a good work ethic. You want to come in and you want to produce. But the more times I was clicking, I wasn't making money. Maybe certain years, I look back at my 20-year career. 99, 2000, 2001, great. 07, 08, 09, yeah, right? And maybe a few times in between. You can trade every day because there's something to do every day. But overall, when you look back, it's because of your experience, because of your preparation, you can look at a day and say, you know what? I know that I'm not going to be taken today. The market's going to be taken. So why would I give? You just give less.
Exactly.
What I find so interesting about everything that you spoke about today is it's very simple. I love it. You read the news. Everybody's got that information. Basic technical analysis. Everybody's got that information. You sit back, you wait, you watch for a move, and then you react. And then from there, you do your job as a trader, right? So I guess because it's so simple, because it's so basic, what do you consider your edge?
I think that my patience is definitely an edge for me. And I mean, I don't want it to sound arrogant, because that's the way it feels when it's going to come out. But like, I feel like I have a good understanding of what other traders are doing and why they might be off balance, or why maybe not even other traders, but why the general public might be doing something that's, mass hysteria and people are stuck and overpricing. I feel like I have a good understanding of those situations. And so I would say that I feel like my edge is just my mental game, as far as like setting up the trade and understanding positioning and being patient and willing to miss moves and wait for my prices.
For all the traders out there listening to this that are interested in statistical modeling, what would you recommend to them to be their first step?
In terms of statistical modeling, I would figure an area of the market that you're interested in and a type of model that you think might be interesting. So I found that mean reversion is something that makes a lot of sense to me from a logical perspective, that frequently in life, in a lot of different ways, things tend to gravitate towards a mean. And in the markets, there are certain types of markets that have mean reversion activity or mean reversion behaviors. So one of the reasons that we trade the products that we trade is that there tend to be long run mean numbers that we can base our analysis on. For example, volatility models and derivative pricing eventually has to converge to what is actually happening in the market. So there's a convergence to a mean, or convergence to an actual behavior within the market, which gives it what I would say is a academic backdrop that enables you to make decisions with a higher confidence level than, say, something where you're trying to statistically analyze a trending market without using, multiple different types of analysis on it.
Last topic before I let you go, Jeff, and I think this all feeds into knowing your strategy, and everything works sometimes, nothing works all the time. The question many new traders face is, what's the difference between a drawdown and a strategy that just isn't working right now or anymore? And I put out there, it's always us as the trader, because going back to my thinking of trying everything, I've seen everything work sometimes, and I've seen everything not work sometimes. So I've always learned that it's always us. How did you know the difference between when you were developing or finding your strategy between a drawdown and then this strategy just isn't right? It isn't working.
Mainly it did come from stats, I'll be honest. It's just that I know the range of the stats. So let me give you, let's say in my basic strategy, one of the stats I derived and I rely on, in 2008, it was the worst. And it was still right around 50-50. In 2017, it was absolutely great. And that stat was more of a 68% stat. So it ranged so my strategy, the basic stat that I'm going off of is going to occur between that 2008 worst and 2017 best. And it's going to be from 49% to 67%. And then from there, I can work out what we're looking like and how to size, how to hold, how long am I holding, and that within the strategy. But that's where the main basis came, where, I know what a worst year looks like. And Could one be worse? Yeah, you should always figure there could be a bigger drawdown. And it also comes from the wisdom of just being through the strategy now for plenty of cycles. Most people, when you first develop a strategy, let's be honest, it's going to be loaded with recency bias. Nobody develops a strategy off of something that hasn't been working recently, most likely. It's something you've seen work recently, and you're watching it, and you're not executing on it. And then you go, let me do some stats. Let me do some back testing. And you go, wow, this is actually looks pretty good. And now for this period of time, it's been going on. Now you say, okay, I'm going to start to paper trade it. Well, a little more time goes by. It's still working. Now you say, I'm going to start to, actually, forward trade it. I'm going to put some money on it, and it's still working. And then they make the mistake of, oh my God, this is it. I found it. And they go and start to really do some size on it because it's just going to work. And meanwhile, that's right when the cycle is ended, because the whole process took you through the cycle of it working well. And now it goes into just a drawdown, but they don't realize it because they don't have experience through the cycles. So they're just stuck. Is this drawdown, or does it not work anymore? I mean, you have to kind of know the windows of your strategy and how long you're going to last. I'll give you an example. I've been around a long time, traded stocks for many, many years in that. One of the little strategies, I don't trade it anymore, I could jump into it and do it, is every year, without a doubt, at some point, the low floaters are squeezing. And you can jump in and trade them. The low float stocks with high short interest, and the market will just start squeezing them. But the window is small. If you watch it for 2 weeks and then you jump in, you just miss the window. The window's coming down, getting slammed on your fingers now, or your head. However deep your body is out trying to get out that window. That's it. But it comes around all the time. And I see it all the time. But I know for me, that wasn't good. I didn't want to have to be looking for 20 strategies to work throughout the year. I wanted to find one that basically gave me plenty of instances throughout the year to be able to execute on. But you could, if you have ultimate discipline, here's a strategy that I know works 2 weeks of every year, size up and be the first one in it. Boom, there you go. But they all have windows. And the size of the window, you need to understand, and that's where a lot of mental edge would come. When your window's getting a little long in the tooth. So now you may take a little less size. You won't be as aggressive. You won't be sizing up at the wrong time. The window may stay open, but you make a little less, but you're not going to make that fatal mistake of sizing up at the wrong time when the window is most likely getting ready to close. I hope that makes sense.
It does. I love and agree a lot with what you said. And I want to give you and everybody one last thought before we go today. When you talk about stats, so I compare everything to trading. So I golf a lot and I'm always at the golf store. I work with a guy about fitting me for clubs, and we're always in communication. Oh, I'm hitting this club this way and that. And we go in and we try to find a club that fits me while I'm on the machine. And then I go out and play it. So right now I'm working on a driver, right? And I go there, and my current driver I've been hitting very well, but I was trying to get a little bit more distance out of it. So I went to the person I deal with at the golf store, and I said, you know what? I'm going to see if I can get a little bit more distance and maybe a little bit more, less of a miss on my pulls. Okay. So it gives me this golf club, and I take it and I go out. And now this club I'm hitting on the machine, stats-wise, a lot better than I'm hitting my existing club. So stats-wise, the spin is right. The launch is right. Everything fits exactly the way I swing. I go out, I'm hitting it shorter, and my misses are worse. Now, whether that may be just me right now with the club or not, but one thing that I have learned is that, in going back to trading, if I find a strategy that maybe doesn't have the best stats, but I know in certain moments that look, I am more confident with the execution of it, then that's a better strategy for me. So going back to a golf club, the golf club that they're giving me that gives me all of the stats that fit me, that fit my profile exactly, I am not swinging it the same way I swing this other club. And so I am going to go back to the other club because I'm hitting it better And just when I look at, when I hear you talk about stats, I just want everybody out there to think about this. You could have stats in a strategy, and then you could have stats in the way that you execute a strategy. I think it's important to look at both, because you might surprise yourself, and a strategy with worse stats, you might get more out of.
I agree. If it's completely uncomfortable to you and you're never going to be able to execute it, then it doesn't matter what the stats are. So in many respects, it has to line up with, yes, over time, you're going to be able to be, what's uncomfortable to most will be a little more comfortable to you. And that's where you have to lead to. But it has to be something that doesn't put you on tilt also, like I talked about. Me shorting tends to become a little more addictive to me. And I can get in a battle shorting and it didn't end well. So what do? Find a strategy, know that that's a defect in my personality, know that no matter what the stats say, that when they're working, I've just got to avoid it. And that's what I did. Put that club back in the bag. It's a 20-yard fairway. Get out the 5-wood. Who cares about 20 extra yards if you missed a fairway? That's it. Put it in the bag.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.